Good morning, everybody. Welcome into another live stream here with the Everyday Growth Advisors. Welcome back. It's a Wednesday. CPI just got posted, came in a little lighter than expected, and the market obviously bought up a little bit of the action. Now, if you've been following this live stream for a while, I have been talking about the point at which everybody is going to start buying this market and start scrambling for upside exposure. And today is the day where all of that is going to come into fruition. This is exactly why this is probably the single most important live stream that we're going to have for a while, because there are a series of events that are going to unfold before your eyes in the next week or so that is going to be very important and counterintuitive to the way that you think about the markets right now. So yes, the CPI news was great. We have been predicting that this market's going to go sideways and then eventually pop to the upside. We got that exactly perfectly. I drew this line in way before this happened, so you guys who have been following along, you know that I've been kind of thinking this is the path that the market's going to take. And now that we're going to get up into this 41.54 all the way to 41.80 level, that is the level at which I had already pre-assigned as possible levels for rejection. We rejected cleanly off this high of this candle at 41.53 during the pre-market session, literally 1 point below my level. So very, very close to what we were expecting. And this is a very important spot for me to give you guys a brief on what I think is going to happen next. Remember, next week is OPEX week, which means that there's going to be once again another rinse of gamma between the market dealers and how they're going to be pretty much taking hedges and controlling their risk towards specific sectors that have been seeing sector rotation. For the past 3 to 4 weeks, now coming to the 4th week, we have been seeing a outflow in the NASDAQ. Watch what is happening to the NASDAQ here versus the S&P 500. The S&P 500 briefly broke out and then receded back. The NASDAQ still remaining quite weak on this CPI news, which means to say that a lot of the tech stocks that they have been buying are starting to look a little overheated right now and might need a little bit of a rinse in terms of that sector allocation in the short run. So you have to think about where this is heading and where we're about to go. We absolutely will be taking some short positions in this 41.80, 41.54 level. If we get up to 4,200, I will be taking more broader position sizes on or taking more risk to the downside, because the more people FOMO into this and the more people take that upside risk, there is a better risk reward ratio structure to the downside. And seeing this rejection right here confirms my hypothesis that the sectors that are most important continue to be weak, and we need to be very aware of this heading into this next week. A lot of people are going to take this news for face value, but remember that a lot of this news has been priced in. So the market has been rallying off the back of expectations for inflation to come in weaker than expected. And therefore, you need to understand that now that the news has been released, yes, the market can go higher, but as it starts to go higher, it is imperative that you look at it from a skeptical view and start understanding that there is a very real 5 to 10% correction on the line in order for this bull market to continue to the upside. Okay, remember that is a very, very important part about the market that you have to understand. It is not always A plus B equals a C or X plus Y equals a Z. There are things that just simply are not going to always work in the way that you think that it is. So now that people are actually given the green light to buy the market and they start buying the market, that's where the cognitive dissonance is going to start to set in. The psychological constraints that people don't quite understand about the market will start to work against them. So this is a very important turning point in the market where you have to kind of understand that this upside here is kind of capped, and that maximum move to the 4,200 is a very opportunistic level at which we can expect a pullback of some kind, possibly, let's just say from 41.90 or 41.80, let's say around this level. We would be looking at least maybe about a 5% pullback at the minimum. So a 5% pullback would lead us back down to 39.60 or 39.70, which would give us an adequate rinse in this capital outflow to set us up for the next wave to the upside, and that will cause a lot of mayhem and panic. The news will start to cycle all kinds of things again, and you also have to watch energy prices. Remember, it's not about being biased. You can be a bull and you can expect the upside with also taking a very subjective view to the markets. Remember that energy prices here are slightly elevated, so that CPI reading that came in today is for last month. And if energy prices are slightly elevated here, then you have to also realize that at some point of time CPI might start to skew to the upside because energy makes up a big flow of it. So some of the important data that I was collecting right before the live stream, apologies for being a little bit late today, but I was collecting some important data from the BLS website, the Department of Labor and Statistics. You can see that the 12-month change in CPI here across selected categories for all items, food, energy, and then all items X food and energy. This is your core CPI here, and you can see that energy obviously has been on a downtrend or a down path since the past 12 months, which is quite normal because energy has been the strongest sector among the S&P 500 in the past 2 years. So now that sector is starting to see a little bit of outflows. You can see CPI now turning downwards and seasonally being adjusted further down here. You can also pull up this chart and put in comparison with all of these other things in here. Obviously, the main bulk of it coming from food. I believe that beef prices are one of the most highest costing items in this basket, and things like bananas and all that are on a lower category. Then you also have services, less energy services. So you have shelter, medical care services, and transportation services. You can see that these are the changes in the price categories for all three of these. And obviously energy is going to feed into a lot of this transportation services, and so we expect this levels to come down a little bit. Shelter, housing, right, is another sector. So the good news is that medical care is on the downtrend here, and we're seeing a little bit of that kind of fade away. So I wanted to kind of present some of the data that I have to kind of give you guys a more accurate summary. So now the tactical plan for SPX here is really quite simple. Wait for the market to FOMO into this rally to the upside and start taking some upside exposure as we get into the 4180 and the 4200. There is a very high chance that we will get some FOMO. But you know what, I always say don't expect it, just go roll with the punches and see what happens. If today the market opens and we immediately reject and the market starts melting downwards, I would take that as a sign that the market already priced in information and started looking into the other direction. So you would immediately forego the fact that we might get up to 4180 and roll with the punches and go with the idea that, okay, we have to start shorting this market and take that downside exposure because the risk to reward ratio makes sense there. You can see that in correlation, Nasdaq is the one that is lagging here compared to the S&P 500, and if you just look at these sectors pre-market here, you can see technology is up very small, energy as well, financials also very small. Majority of the sectors are just very hairline above what they were. Consumer discretionary seeing a little bit of a pop here. Materials also seeing a little bit of a pop, as is every other sector, just up very modestly this morning. Not really anything crazy. Obviously, you can see that majority of the sectors saw a little bit of inflows. As per our expectations, the U.S. bonds are continuing to see a little bit of inflow, so yields are coming down a little bit. This is going to obviously give support to equity pricing and allow some of that valuations to breathe a sigh of relief. Disproportionately affecting small mid caps as well. So you want to keep an eye on IWM. Actually, this might be the play if you're really looking for some upside exposure. This might be the one to possibly take upside exposure on, seeing that this has been muted and is the lagging indices in the past couple of weeks. So heading into next week, also another thing, sorry, right before I continue into heading into next week, but today we have Fed minutes, which will be posted at 2 p.m. Take my advice, please do not trade today and sit out. Let the market do its thing, and you'll start to see why I say things like that, because when the Fed minutes come out, even though it's largely expected, it's not really going to be that much said in the meeting, but they might mention something about the banking crisis, and that might cause a little bit of jitters, and that's just something that you have to kind of look at. The dollar index continues to dump here. Cheaper dollar, remember that means continual support for equity pricing and also dollar cost parity against financial instruments denominated in USD. So that's also going to be another factor that you have to play into this equation. So I'm kind of happy to be able to put all of this information together for you guys. I wanted to make sure that you have all the information instead of me just coming onto the stream at the right time but not giving you the proper picture. So really quite straightforward. If you guys have any questions, post them in the comments right now or the chat right now so I can answer them. But be very careful with the way you're going to take this upside here. I wouldn't go too crazy on the upside. I'm more, off the view here to start taking some downside exposure when the opportunity presents itself. If this market can continue to move to the upside, I will be increasingly more happy to take that downside exposure just because of the risk to reward ratios involved. Apart from that, you can see a handful of stocks are up nicely pre-market. Tesla is one of them. Coinbase, which has been on a pretty interesting rally for the past 2 days, building into a bull flag and trying to break out here again. But remember, watch the premiums on this one. The IVs on these contracts are pretty crazy for even the next 3 to 4 weeks. So I didn't really trade Coinbase for that reason. Buying expensive, contracts like that are not really my cup of tea. I don't like to play, trades like that. So there's obviously some opportunities, and then some opportunities that are not really that great neither. Apple continues to be weak. Microsoft continues to be weak. Not really seeing a lot of inflow here. So yeah, I would definitely take today's CPI data with a grain of salt. It's going to be one of those events that might be buy the rumor, sell the news, and very much so that if the market continues to melt up, I will be interested to take that downside exposure once again as people start to get bullish. That's how you have to pivot your mindset and start taking exposure off the table, because then retail traders are going to start piling into this and scrambling for that upside exposure. For us to be like a market maker, we have to think like a market maker, and we have to execute like a market maker, and therefore up into these levels here, we are going to start to take some of that downside. So that's all I have for you guys today. A very short stream, just keeping it as simple as possible. Once again, you have any questions for me, post it right now. I'll wait a minute and see if you guys have any questions. If not, I'm going to end the stream early and just kind of focus on what I'm looking at for today. Not really that many opportunities just yet, by the way. So go ahead, post your questions, comments. I know some of you also ask questions on IG story. I'll be answering those in the morning. So just giving you guys a heads up. All right, I don't really see many questions or none questions to answer. So I'm gonna get off the stream here, jump on the Discord, and get you guys. Well, remember, you still have access for 14 days if you want to join the Discord, trade with us live every single day. 14-day free trial is in the description below. And remember, as always, remember to manage your risk. Don't take stupid positions and FOMO into the market. Wait for those opportunities. When we get that 5% correction, we can take that upside risk exposure when the market starts to price in fear. But more on the OPEX on Friday. I'll have more data then as well. Till then, keep it cool, and we'll see you guys soon. Take care and peace out, guys. Love you all. Bye.